Hi everybody, Mike DiVita here. Today's topic, I want to talk to you about VA loans. VA loans are available to active military or veterans. They're offered by the Department of Veteran Affairs, and they really are an amazing tool if you've served in the military. I want to encourage anybody who's eligible for this loan to watch this video. I also want to encourage you to watch the rent versus buy video, because there's so many advantages to these VA loans. And if you're renting still, you're really leaving money on the table. So these loans came out during World War II, part of the GI Bill, and they've literally helped millions of Americans get into their first home. And today what I'd like to do is talk about some of the characteristics of a VA loan, and I want to do a comparison of a VA loan compared to an FHA loan, which is a type of government financing available to everybody else who was not in the military. So first I want to move to the whiteboard and talk about some of the characteristics and advantages of a VA loan. So number one, and this is the main one, you can buy a house with no down payment. That's right. You heard me right. No down payment. Number two is easier credit requirements. So, we're seeing VA loans being done with a 580 credit score, which is amazingly low compared to conventional finance where you need at least a 620. There's no monthly mortgage insurance payment. And that's the main difference between that and an FHA mortgage, which has a significantly high premium for mortgage insurance. The rates for a VA loan are just lower than conventional financing. They're a little bit better. Another advantage is they'll actually have higher loan amounts available to veterans compared to conventional loan financing and also FHA financing. And then the last thing is they're just easier to qualify for. It's just a great loan, and there's a lot of advantages for veterans. So let's move on to the example I wanted to do, and that's the VA comparison to an FHA mortgage. So I'm going to use $600,000 as a purchase scenario. So you're buying a house for 600 grand. The down payment on a VA loan is zero, no money. The down payment on FHA is 3.5%, so still pretty low. That's only $21,000 you need to part with. The loan amount for the VA loan, since you're putting zero down, is $600,000. The loan amount for the FHA mortgage is $579,000. So that's, the purchase price minus the down of $21,000. Now, the VA loan has a premium. It's called a VA funding fee. So that's paid when you close escrow. And if it's the first time you're buying a house, it's 2.15% of the loan amount. That comes out to $13,500. Now, the FHA mortgage has upfront mortgage insurance, which comes out to 1.75%. So it's lower than the VA loan. That comes out to $10,133. Now, both of these loans will allow you to finance that fee into the loan amount. So you can actually add the $13,500 to the $600, which gives you a new loan amount of $613,500 on that VA loan. And the FHA loan, you can raise up to $589,133. Now let's assume a 4% rate for both loans, just to have a fair comparison. And this isn't a quote for rates, just for this illustration. The monthly payment on the VA loan is $2,928 per month. The monthly payment on the FHA is $2,812. It's lower because you have a lower loan amount. But the monthly mortgage insurance premium, there's the big difference here. It's zero on the VA loan. It's zero. On the FHA loan, it's 1.35% per year, which comes out to $651 a month. So once again, you still have that $2,928 mortgage payment on the VA, but when you add the mortgage insurance to the FHA, you have a payment of $3,463. So you can see the big difference here. It's $535 per month for that FHA loan compared to the VA loan. And you got to add that mortgage insurance premium to the rate. It's 1.35 on top of the 4% rate. So the effective rate on that loan is actually 5.35%. And once again, let's go back to the huge benefit of the VA loan, zero down payment. You're still sitting with $21,000 of cash in your checking account compared to the FHA loan. So you can really see the advantages of these mortgages. I mean, if you're renting right now, you could buy a house with no money down. Now you're really throwing money away, in my opinion. You can start, instead of renting, you're, building equity in a property with that mortgage payment. And, I want to encourage you, if you have any questions about the buying process, the real estate process, click on the link for our California Home Buyers Kit. It's on this page. It's going to help you understand the process. And if you decide you want to buy something, you're going to feel really good about that decision because you're going to understand everything. And if you want to get pre-approved, just click on the link below. It's going to start the process. We're going to run your credit. We're going to tell you what you need to know, what you need to put together to start the pre-qualification process. And it's going to make you comfortable to go out there and start looking for properties. If you have any questions at any time, reach out at 1-800-239-1103. I'm happy to answer any questions about the process. And you can send me an email anytime at mike@mycahomeloan.com. Thank you and make it a great day.